Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that one or two people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have two guys who are ahead of that and one knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette
I'm a writer for Bloomberg News for the global business team.
and Kim Basine
And I'm the U.S. luxury reporter at Bloomberg.
to find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW.
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
with violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to the big stars' entrance music and their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And 3, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play, because some of life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission, track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future, in coastal areas it's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube-sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, e-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in the case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're looking at a down day on Wall Street now, a down Thursday. Stocks at or near session lows. S&P down 16, down 0.4%. Right to the numbers. We'll give you the why in a moment here with the Dow, now down by 145 points. Down 0.4%. NASDAQ down 15, drop there of 0.1%. NASDAQ 100 index lower now by 0.3%. Stocks turn lower in afternoon trading as investors assess data that showed fewer Americans applied for unemployment benefits last week and evaluated the outlook for global central bank stimulus after policymakers in Europe decided to slow bond purchases. 10-year up 15-30 seconds, 10-year yield right now 1.28%. As for the market backdrop, Lisa Shallot is Chief Investment Officer for Wealth Management at Morgan Stanley.
You know, our sense has been that this is a market, that is shrugging off most of the concerns, whether it is, disruptions coming from Delta variant, whether it's, supply chain concerns, whether it's been the China regulatory crackdown or, shifts in policy from the Fed. nothing really has gotten in the way of this market.
Spot gold up 0.4%, $17.96 the ounce. West Texas Intermediate crude has dropped 2%, now $67.93 a barrel. After earnings, Lululemon Athletic up now by 11.2%. We have got GameStop up by 0.5%. Boston Beer, SAM on the ticker there after Sam Adams. Boston Beer down now by 4.5%. Again, recapping equities lower, just about the lows of the day right now, with the S&P slumping 16, down 0.4%. The Dow down 140, down 0.4. NASDAQ down 0.1%. Town day on Wall Street. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio in New York. Good afternoon to our audience on Bloomberg Radio and on YouTube. It's Bloomberg Business Week on this Thursday, September 9th, 2021. I'm Tim Stenovic. Carol Masser is taking some well-deserved time off. Joining me now is Bloomberg's Wall Street correspondent, also the co-anchor of Quick Take Focus, Sonali Basak. Sonali, it's great to have you on the show today. U.S. stocks trying to snap that three-day losing streak, not looking like that's going to happen, at least now. Chinese stocks also under pressure again as a result of regulatory concerns. A lot of virus news that we're going to get to today as well. The president announcing that all executive branch employees and federal contractors need to be vaccinated, while at the same time more companies are delaying their returns to the office. We're going to get a virus update, and we'll also talk about employer mandates for vaccines. The question: to vaccinate or not to vaccinate, or to mandate or not to mandate, rather. We're going to also dive into Greensill, the former fintech darling that collapsed in a crisis of confidence, and the CEO of the helicopter company Blade Air joining us, the company branching out beyond ferrying those well-heeled passengers from NYC to the Hamptons and into transporting organs. We're going to round out talking education. Amazon spending $1.2 billion on employee tuition. We'll also check in with a data scientist at the publicly traded online education company Coursera on how the pandemic has shifted online learning. All that and more coming up in the next 3 hours. In the meantime, let's get to the Market Drivers Report. And with us now in the Bloomberg Interactive Broker Studios in New York is Dave Wilson, stocks editor at Bloomberg News. Also joining us, Michael McKee, international economics and policy correspondent at Bloomberg News. It's a full house. It's a party on this Thursday afternoon, but not so much of a party playing out for U.S. equities, Dave. What happened? We were higher for much of the morning.
Yeah, things are just kind of fading here, really. I mean, you're not talking about major moves, clearly, with the S&P 500 down 0.4%. You know, that said, I mean, most of the 11 main industry groups, 9 to be exact, in the S&P 500 are lower at this point. Seeing some weakness among the drug makers, Biogen, Eli Lilly, Regeneron, and more. You had the Biden administration come out with a plan to rein in prescription drug prices, give federal programs, Medicare, Medicaid, the ability to negotiate with drug makers. So, I mean, that's been something that's been kicking around for a while, and now it's back on the table. So, that's certainly something that jumps out of today's trading.
But nothing really that prompted stocks to move lower earlier this afternoon.
Not so much. I mean, it doesn't seem like there's an obvious kind of a catalyst at this point. And I will tell you something that's interesting, though, sort of on the flip side. I mean, you had early in the day, you had the airlines come out and basically like bring down their numbers in terms of this quarter or the rest of the year. And they have turned in some pretty solid gains. So people must have been expecting a lot worse. American, for example, up more than 5%.
Dare I say that investors think that those issues for the airlines are transitory? Potentially. Speaking of transitory, I want to bring in Michael McKee, international economics and policy correspondent.
Does Sonali know that you're supposed to take a drink every time somebody says transitory?
She does now.
If you cover the Fed, you're in a lot of trouble.
Well, I want to cover the ECB a little bit because, of course, with what we saw earlier today, at least U.S. time, the European Central Bank saying that it's slowing the pace of its pandemic bond buying program in the final quarter of the year. But don't call it a taper. Don't you dare call it a taper.
Don't you call it a taper.
Is it a taper?
It sort of, but sort of not. The best analogy I can think of is, when you want to buy something at the store and you think the store has raised the price so then they can put it on sale and pretend it costs less. The difference between the Fed and the ECB is the Fed has set a bond buying program with no limit. It just goes as long as they want it to go. And so tapering will be pulling that back specifically, and each month gets smaller. The ECB set out a certain amount of money they were going to spend, which is like 1.85 billion euros. And they're going to, they have, if you divide it, they said it will end in March of 22. So if you divide it out over the time periods, the 2-year time period, you get X amount per month. And what they did was accelerate that, raise the amount they were spending in the front months. And now they're going to spend a little bit less as they get more towards March. And so it's the same amount of money that could go out the door. It's just the difference in the time it takes to do it. Although they do say we might not use it all if the economy really picks up, or we might need more if we don't.
So put this into perspective here. You had this big conference by the ECB today. You had the jobs report, right, that was out today, stronger than expected. How do you couple that with what we saw last week, which was very disappointing on Friday, and other economic data like the Beige Book survey when it comes to how people feel about how the Fed may react?
Well, I think the Fed is still more or less on course, because the problems we're having in the economy right now are not demand problems, they're supply problems. Companies can't get the materials they need to work with, and they can't get the employees they need to work on. And so the Fed can't really address that with monetary policy, which is designed to increase demand. So they know that they can probably taper, cut back, maybe lower, and this is Dave's area of expertise, maybe lower the bubble risk out there, because all this excess money going into financial assets. They can do that without really hurting the economy. It's raising rates that would hurt the economy. And if they taper slowly, and this is the ECB's idea as well, if they do all this slowly, you don't have a taper tantrum and rates don't go shooting up.
Dave, just in the last 20 seconds that we have with you, was there any sort of equity market reaction when we heard this earlier this morning?
Yeah, I haven't seen much. I mean, it's really kind of been an early up day and then sort of kind of dragging down since then. So, that's how things are stacking up, and we'll see how they unfold the rest of the day.
Kind of feels like the weather here in New York City if we look outside.
Yeah.
At least for us. Dave Wilson, stocks editor at Bloomberg News from the Bloomberg Interactive Broker Studio. Also, Michael McKee, international economics and policy correspondent. A big thank you to both of you for that. It's time for the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot, brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com. Today's number, 120. Burger King has announced it's permanently banning 120 artificial ingredients from its U.S. food menu, ranging from the ketchup to buns, as part of its commitment to deliver, quote, real food. Well, there you have it, 120. Let's head now to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is there now. Hey, Nance.
Hey, Tim. We'll be hearing from President Biden later this afternoon. He'll be outlining a new plan to control the spread of COVID-19 in the United States. Bloomberg's Amy Morris with more.
The president is expected to focus on 6 areas, including an order for government workers to get vaccinated with no opt-out option for testing. White House officials say the speech will also cover increasing testing and mask wearing, protecting the economic recovery, and improving health care for people who are already infected. The president will announce his plan at 5 o'clock Wall Street time, and we'll bring it to you live here on Bloomberg Radio and on Bloomberg Television. In Washington, I'm Amy Morris, Bloomberg Radio.
The serious work of crafting a $3.5 trillion budget package is underway in the House. Massachusetts Democrat Richard Neal is head of the House Ways and Means Committee. He says the measure is needed to help those working families who were hard hit in the COVID-19 crisis.
The pandemic has claimed the lives of hundreds of thousands of family members, friends, and neighbors. Millions of workers lost their jobs as COVID decimated the economy.
Neal calls this measure historic. It is the heart of President Biden's legislative agenda. Dozens of foreigners, including Americans, have left Kabul on an international commercial flight, making the first large-scale evacuation since U.S. and NATO forces left Afghanistan late last month. Their departure represents a breakthrough in the bumpy coordination between the U.S. and Afghanistan's new Taliban leaders. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenovec and Shonali Basak live in the Bloomberg Interactive Brokers studio in New York. Shonali, let's do a virus update because they had a lot of headlines crossing the Bloomberg terminal throughout the day about the virus. The president has ordered federal workers and contractors to get COVID shots. He's ordering all executive branch employees and federal contractors to be vaccinated against the coronavirus. That's according to a person familiar with the matter. This is a move that stretches the administration's authorities to new lengths as it seeks to quell the resurgent COVID-19 pandemic, Shonali.
And then you take a look at how employers are acting, and you've seen already some companies push to October. Now you see American Express delaying its plans into January at the earliest. And you see Microsoft that is scrapping its return to office plan and not giving a date yet because the pandemic is too unpredictable. Now, when you pair that with what my sources are telling me on background about Wall Street, they are saying that they're comfortable with the data and they're ready to stick to October plans and bring people back this year.
Well, it's so interesting that you say that because there's also a story on the Bloomberg terminal about Goldman Sachs ending social distancing and free food in its London office. It's going to return to full occupancy starting next week. And I wonder what this tells us about the way that the virus will or will not continue to proliferate in the United States, considering many experts have said, hey, look to England as an idea of what's to come in the coming weeks.
It's so interesting, and it's interesting to see, as you say, the Biden administration really expanding the way that they are treating their own requirements of their employees, and the note that sends to employers. Employers are looking at the data and saying we have enough to make decisions now, but as Amex and Microsoft say, the pandemic is too unpredictable, and let's see how the winter months roll out.
Here in the United States, and especially, New York is where I live, so it's what I think about a lot and what I see and what I experience. I think that with school starting next week and city employees being told to go back to work next week, that will be the true test for what we see in New York City. And we might see more offices filled, but again, those posts might be moved. This is Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is a down Thursday. The Dow, the S&P, NASDAQ very close to session lows. S&P now down 14 points, a drop of 0.3%. Dow Industrials down 126, down 0.4. NASDAQ lower by 6, a drop of less than 0.1%. 10-years up 14.30 seconds, 10-year yield 1.29%. Stocks turning lower as investors assess data showing fewer Americans applied for unemployment benefits last week, while evaluating the outlook for global central bank stimulus after policymakers in Europe decided to slow bond purchases. Again, the 10-year 1.29%. Spot gold up 0.4%, $17.96 the ounce. West Texas Intermediate crude down 1.4%, $68.34 a barrel. After earnings, Lululemon Athletica surging 11.2%. We've got GameStop shares up now by 0.5%. Also rallying today after earnings, RH, the old Restoration Hardware, shares up now by 7.9%. Recapping, stocks lower, S&P down 14, down 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, let's get to a virus update. The president, as we mentioned, is expected to ask the Labor Department to put out a rule for employers with more than 100 employees to have a vaccine requirement or a testing requirement. This, according to NBC. He's set to announce a requirement also for all executive branch employees and federal contractors to be vaccinated. This is part of a renewed push to quell the pandemic, a person familiar said. Meanwhile, Delta Airlines said that a fifth of its unvaccinated employees received a COVID-19 shot in the 2 weeks since the airline announced that they would be subject to that $200 monthly surcharge. And Microsoft said it will not forecast a new date for a full reopening of its U.S. work sites. It had planned to start reopening in just about a month on October 4th. Let's get into it with Dr. David Dowdy, an infectious disease epidemiologist at the Johns Hopkins Bloomberg School of Public Health. Joins us on the phone from Baltimore. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Dr. Dowdy, it's great to have you on the show. Where do you think we are in terms of the Delta variant peaking here in the United States? Do we have to think about it regionally more so than as a kind of countrywide basis?
Yeah, well, thanks so much for having me, Tim. And you know, I think the answer to the question is really yes and no. So there are definitely regional variations. We're seeing with the current surge that the rates in the South, for example, are about 3 to 4 times what they are in the Northeast. So there's definitely regional variation. At the same time, we're seeing the ups and downs be somewhat synchronized, right? So we're really seeing peaking in most areas of the country, not all, but most. And so I think that there's reason to be a little more optimistic going forward. We still have rates really high right now, but they are at least starting to level off in most places of the country.
Well, I think that idea of whether this variant is peaking or not is an important question when it comes to return to work. Do you think that it's getting to a point that people can safely come back and be together if they are vaccinated en masse at these major employers that are trying to do so?
Yeah, so I do think that we're probably a little bit too early to be talking about everyone coming back to work. I mean, while things are starting to peak and starting to look like they might be trending in the right direction, I think it's still important to remember that we, in this country, we still have over 100,000 people in the hospital right now, and those numbers are about as high as they've been this year. So we are starting to see things trending in the right direction, but I think it's still a little bit too early to be fully opening again. I mean, we need to get things down before we start to open fully back up.
But the difference between the people who are hospitalized with the virus right now and the people who were hospitalized in January are that the people who are hospitalized right now are not vaccinated. I guess that's not a difference because they weren't vaccinated in January, but the difference is we have vaccines available, and the people who are hospitalized are not vaccinated.
So I think that's true. I mean, we are certainly seeing a separation between the vaccinated and the unvaccinated, and you know, of those people in the hospital, about 90% are unvaccinated, as you mentioned. So, but that being said, we are all in this together, and you know, even among people vaccinated, right? Rates now of say hospitalization are not too different from that of the unvaccinated back in June, and that's not because of waning immunity or anything like that. It's just because we have so much transmission still going on right now, and so many people still sick.
Speaking of the differences of now between last year and now, the other point that employers keep trying to make to us is that the people who are in the hospital are largely those with pre-existing conditions. And so now it's a matter of being careful. What would you say to employers that are operating under that line of thinking?
Yeah, so I think that's a great question. It is true in general that people who are going to get sicker from this disease are going to be people whose immune systems are weaker. So whether it's because they're older, they have underlying conditions, etc. That being said, you know, we don't want to set up a precedent of discrimination in the workforce, right? And say that to work you have to have a fully functioning immune system, right? So I think that we do owe it to those who are at highest risk to try and do what we can to reduce transmission in the community as a whole.
So it raises the question,
really,
Dr. Dowdy, just in the last 30 seconds that we have with you, are vaccine mandates from corporations the right move?
Yeah, I think it's not a bad idea, right? I don't want to come out too strongly one way or the other, but I do think that if you want to make your workplace safe, having your workers get vaccinated is one thing you can certainly do.
All right, we're going to have to leave it there. Dr. David Dowdy, infectious disease epidemiologist at the Johns Hopkins Bloomberg School of Public Health. He joined us on the phone from Baltimore, the Johns Hopkins Bloomberg School of Public Health. It is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropy. Shonali, I remember a few weeks ago we were thinking, okay, the fall is when we'd all be back in the office, and that certainly has changed.
Obviously, it's not how it worked out.
No. All right, we'll continue to bring you the latest. This is Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenovec and Shonali Basak live in the Bloomberg Interactive Brokers Studio in New York. In just a few minutes, we're going to continue our discussion about the latest when it comes to the virus. The question, to mandate or not to mandate? That's the question that this next article asks and tries to answer as well. In the meantime, let's get a check on what is going on with the trading day. For that, here's Charlie Pellet.
And thank you very much. To rally or not to rally, here's what's going on. We had gains earlier in the session. Right now, a move lower for the Dow, the S&P, NASDAQ, and NASDAQ 100 index, all very much in the red, very close to session lows right now. Slight bounce off the bottom. Right to the numbers, we'll give you the why in a moment. S&P down 16, drop there of 0.4%. The Dow down 142, drop also of 0.4%. NASDAQ down 14, drop of 0.1%. NASDAQ 100 index lower now by 0.3%. Russell 2000, by the way, pushing higher, up 0.3%. Stocks turning lower as investors assess data showing fewer Americans applied for unemployment benefits last week. They're also evaluating the outlook for global central bank stimulus after policymakers in Europe decided to slow bond purchases. 10-year yield 1.29%, spot gold up 0.4%, 17.95 the ounce. West Texas Intermediate crude down 1.7%, 68.14 a barrel. American Express again delaying its plans for returning its American workers to the office, citing the spread of the highly contagious Delta variant in setting a new date. Microsoft abandoning plans for a full return to work, says it will not forecast a new date for reopening its U.S. work sites. All of this as more companies make vaccines a requirement for returning to the office. Dr. Jennifer Nuzzo is a senior scholar at the Johns Hopkins Bloomberg School of Public Health.
Well, I think the thing that's probably going to have the biggest impact is what's been going on. And businesses are rightly wanting to get back to business. They want to do so safely. They realize that their employees want to come back, their customers want to come back, and that the best way to make sure that happens safely and happens without further interruption is to require that their employees get vaccinated. Now that the vaccine is approved, at least we have one vaccine formally approved, I think it makes it easier for businesses to make that decision. And I think that's going to have a big impact in terms of vaccine uptake.
Dr. Nuzzo with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine stocks that we follow on a regular basis, Pfizer down 1.3%. Its German partner, BioNTech, its ADRs up 4%. ADRs of AstraZeneca down 1.6%. Moderna surging now by 7.1%. J&J down by 2%. Briefly, JP Morgan Chase acquiring restaurant reviews company The Infatuation. Among Infatuation's best-known brand is the restaurant guide Zagat. JP Morgan Chase shares up 0.4%. Recapping stocks lower, S&P down 17, down 0.4. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that, Charlie Pellet. Really appreciate that update. Let's continue with additional virus headlines that we're continuing to get. As the United States enters what, Shonali, we thought would be a turned corner, right? We thought we would be turning the corner right now. And instead, we're hearing, as Charlie mentioned, from Microsoft, from American Express, hey, keep working from home because the Delta variant is spreading out of control.
Yeah, and a lot of anxiety for those who work in not only hotspots in the United States and abroad, but also for those who are facing inconsistencies in how their employers are dealing with the virus.
Yeah, so let's go through some numbers here because globally, cases have surpassed 222.8 million. Deaths have surpassed 4.6 million doses.
Fired if they don't get the vaccine. The Washington Post notably did this. So, that is something employers are looking at. They're taking a pretty hard line here and under the idea that that's the best way to keep everybody safe and get them back to work.
Kara, is there, and it might be too early to even ask this question, but is there any indication that one sort of incentive or one sort of policy works best or is working?
So Delta Airlines actually did come out this morning, and they had they're the ones charging a surcharge $200 a month to people who don't get the vaccine for their health care. And they came out and said today that they have seen an uptick in vaccinations. They now have about 78% of their staff vaccinated versus 74% before, and they haven't seen people quit over this. So, that's a bit more of a stick instead of a carrot approach that perhaps maybe is getting more people off the fence. And Delta was one of the first large companies to do this type of thing. So, you might see more of that come into play. I think it is still early because a lot of these mandates they've given workers time to get this done.
Right.
So even the companies that are fired are saying, get this by October or something like that. So we'll have to see how that plays out.
Yeah, we certainly will. Kara Wetzel, San Francisco bureau chief for Bloomberg News, joining us on the phone from San Francisco. Check out more stories from Bloomberg's The Big Take on the Bloomberg and, of course, at Bloomberg.com. Definitely check this one out because you can change it online based on and organize the table, and it's a really helpful table about what is actually going on when it comes to these mandates. In the meantime, let's go to Washington, D.C. for a check of the latest world and national news. Hey there, Nance.
Hey, Tim. Lawmakers are getting down to the nitty-gritty on President Biden's $3.5 trillion economic agenda.
At the center of the action today is the tax writing House Ways and Means Committee. Members will debate measures on expanding Medicare, paid family leave, funds for elder care workers, and a boost to retirement savings. Ways and Means Chairman Richard Neal also says his committee will probably extend the expanded child tax credit another 4 to 5 years. He expects the overall tax plan to be released sometime this weekend. In Washington, I'm Nathan Hager, Bloomberg Radio.
President Biden is expected to sign an order today requiring all federal workers to be vaccinated. That would include millions of federal contractors. White House Press Secretary Jen Psaki says there would be no opt-out options like weekly testing.
There are limited exceptions, but the expectation is that if you want to work in the federal government or be a contractor, you need to be vaccinated unless you are eligible for one of the exemptions.
Psaki says the reason we're seeing a surge in cases is because 80 million people have not received a shot. President Biden will update his COVID strategy in a White House speech at 5 p.m. Wall Street time tonight. You can listen here on Bloomberg Radio. Add Microsoft to the list of corporations delaying the return to the office. The company told employees today it has indefinitely delayed the return, which had been set for October 4th. Until it's safer to do so, Microsoft says it'll wait for public health guidance on when it's safe. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Really appreciate it. Among the most read on the Bloomberg terminal, I got to tell you, Sonali, I'm noticing a pattern. If there's an article about the CFA exam or the CFA, it's a pretty well-read article.
Yes, it is. It's because the CFA or the MBA is like a rite of passage, right, into Wall Street and many major C-suite jobs. That's changing. And now people are wondering, which skills do I get? How much do I pay for those skills? The CFA, the argument that's made in the story, is that you're getting further and you're getting it without that massive debt load that comes for paying with business school.
Yeah, but do you get to go on those business school trips around the world that you get to go on when you're getting your MBA?
I mean, I didn't go on one of those even in business school. So, point taken.
Yeah. Well, this article, it's by our own Claire Ballantyne and Natasha Abelard. The CFA route to finance is cheap but proving very stressful. Schmoozing won't get you anywhere in the CFA program. Analyst certification. Wall Street's aspiring asset managers need to have a stone-cold mastery of skills like valuing stocks and analyzing financial statements, not after-hours networking drinks that are hallmarks of an expensive MBA program, an alternative path to getting a job. I think that the thing to keep in mind, though, is a lot of people, and I encountered this when I was in business school, a lot of people, and they even told us this on the first day, Sonali, they said divide your time into 3 different buckets. One bucket is studying, one bucket recruiting, and the third bucket, networking.
That's
literally equal time for each of those 3 things.
Well, people talk about the soft skills, and I would say the soft skills I picked up in my MBA were those of negotiation or ethics, and those are skills that you really need to do your job quite well. You could also just pick up a book, can't you?
Pick up a book, do some Googling?
Do some Googling.
Maybe.
Talk to your colleagues, right, Tim?
Yes, you could. And I think, it's an interesting debate, and I think it's one we're going to continue to see play out, especially when it comes to thinking about accessibility tied to the paths that these MBA programs promise, and to what extent these paths are actually more accessible when you go to certain MBA programs.
For a new workforce,
Exactly.
especially with
Right.
crypto and fintech taking over.
This is Bloomberg Radio.
Markets, headlines.
From Bloomberg World headquarters, I'm Charlie Pellet. Stocks trading close to session lows right now. Right to the numbers with the S&P down 15, drop right now of 0.3%. NASDAQ down 18, a drop of 0.1%. Dow Industrials down 126, down by 0.4%. 10-years up 12.30 seconds. 10-year yield 1.29%. Equities lower as investors remain on edge about the timing of stimulus tapering by central banks, even as the relentless spread of the COVID-19 Delta variant undermines global growth. S&P on track for a fourth straight decline. Again, S&P down now by 0.3. Spot gold up 0.3%, $17.93 the ounce. And West Texas Intermediate crude down 2%, $67.93 a barrel. After earnings, Lululemon Athletica up by 11%. GameStop shares little changed, up less than 1/10%. RH, the old Restoration Hardware, up now by 7.8%. Again, recapping, stocks lower, S&P down 14, a drop of 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, the simple flaw that sank Greensill's complex financial empire. It's a story available in Bloomberg.com and Bloomberg.com/businessweek. Available now on the terminal as well. The former fintech darling took in money from investors seeking safety, and they used it for risky loans. It all collapsed in a crisis of confidence. Joining us now is Joel Weber, editor at Bloomberg Businessweek. He joins us on the remote access line from Brooklyn. Also, Luca De Paoli, who wrote the story, distressed debt reporter, joining us on the phone from London. He is with Bloomberg News. Joel, I want to start with you. What was the simple flaw that sank Greensill?
Well, so much of it was wrapped up in this company doing supply chain management that it was this opaque structure that they had, and they were able to get out over their skis by promising to do things that they really weren't doing. And I think the artificial intelligence capabilities that they claim to have were part of that. And what Luca has been, obviously all over this story, which has, I think, been one of the most captivating kind of finance stories of the year. And we just kind of encourage him to keep going bigger and kind of try and wrap it all into a big, sweepy story, so that you can understand that there have been twists and turns along the way, but ultimately in the background was this flaw of basically selling something that they didn't really have in practice. And so I want to hear more about that from Luca, and also hear about some of these new twists in the story, which some people might not be familiar with, including how it resonates in America, especially in West Virginia. So Luca, what do you feel? How well did I nail that flaw in describing it?
Yeah, I think that's pretty good. I mean, the thing, the disconnect here is ultimately between what Greensill was selling. It sits in the middle, basically, right? So it's a non-bank lender, in effect, with a bank on the side. But you have clients, customers who want loans, and then in order to fund those loans, you do it by selling them on to someone else. And if you look at how the loans were described by some of the customers, they're very different to how they appear by Credit Suisse and the marketing documents around them. So somewhere between that chain of sort of Jim Justice and Sanjeev Gupta through Greensill and into Credit Suisse, there was a disconnect in what they were lending to customers and what they were selling on to investors.
It's a simple flaw, as you mentioned. And if they are able to have caught themselves in such a mess like this, what's there to be learned for other fintechs that may be suspect to similar flaws?
Yeah. So, I mean, ultimately, this is kind of pretty unusual. And I don't know, do the same thing. There are lots of people who work in supply chain finance, which is a fairly sort of, it's not super old, but I mean, it's part of the broader world of trade finance, which has been going on for hundreds of years. But the really sort of strange and interesting thing they did was a different business altogether called Future Accounts Receivables Finance, which was essentially quite different from the lending which they were purporting to be doing, which is essentially lending to cover gaps in cash flows, lending to make sure that invoices can be paid quicker but at a discount. And then it moves into Future Accounts Receivables Financing, and it becomes something quite different. And once you're starting to do that, you're taking on a different level of as far as I can see from the documents that were shown to Credit Suisse investors, I'm not sure that they understood those risks.
Luca, I'm wondering what the status of Lex Greensill is right now. You do mention this story that he hasn't been a target of any government investigations, but his life is changing. He used to have a fleet of 4 private planes. They'd trot the globe, and they'd go to Bogota and Ibiza, Bangkok, Riyadh. What's he doing now?
So the last public appearance that Lex Greensill made was Well, was that an inquiry by lawmakers? I mean, this story had particular resonance in the UK due to some of the lobbying that went on, access to government loan schemes, and that involved a former Prime Minister from the UK, David Cameron, who was an advisor to the company. So he went in front of the Select Committee, where he received, we quote some of it in the story, where he received some pretty aggressive lines of questioning from the members of Parliament who were there. But yeah, I mean, the business itself is in various states of insolvency. There will be an attempt, I would imagine, to try and wind it up. But the real sort of loans, most of them sit either in a bank in Germany, which Greensill bought, or they sit in funds run by Credit Suisse. And there will be an attempt to try and extract as much value from those loans as is possible. And that's something that's still ongoing. So that will take a long time. And we won't know sort of all the ins and outs of this for a long period, I would guess.
So you mentioned, I mean, I think one of the things the Greensill story has really been true, and you mentioned this, is that it's so much of a European story. But the interesting thing in this particular story, Luca, is that you managed to connect it across the pond. So talk to us more about the justices and the West Virginia component of it, because it really does show the sort of how a supply chain management company can have these global implications.
Sure. So yeah, the justices have a business in West Virginia. It sells met coal, mostly to producers of steel. And Greensill extended a large line of financing to them. 70 million of that, which is supply chain finance, which, as I said, is the sort of humdrum, very normal business that a lot of banks do at scale. It's low margin, but people do it. And then the rest of it was in future account receivable financing, which is quite different. So the issue there is that rather than it being sort of an invoice, where it's like, okay, well, I'm going to get paid my money at the end of the day because there's an invoice, and some people might not pay it, but that's going to be relatively few and far between. It's based on things that haven't actually occurred yet, but future sales that may occur in the future. And the justice used this facility. I think they had 850 million in total. It was about $780 million of future account receivables, and they describe it in their lawsuit, in their words, in this lawsuit that goes through their relationship with Greensill. Well, the issue now is that, as they have in an amended lawsuit later on said, they have personal guarees. The justice going to have personal guarantees with Greensill security.
Luca, we unfortunately have to leave it there. Luca De Pauli's distressed debt reporter, Joel Weber, editor of Bloomberg Business Week. It is a fantastic story that spans the globe. Everybody check it out. You can read Luca's story on the Bloomberg and at Bloomberg.com/businessweek.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story out of Apple headquarters in Cupertino. Software executive Kevin Lynch is taking over the car project there. Apple's Lynch has run software efforts for the smartwatch and for Apple Health. You'll recall earlier this week, Doug Field left Apple's car project after 3 years to join Ford. Apple shares right now trading lower by 0.4%. NASDAQ just turning positive, up now by 1 point, little change. We've got the S&P off, session lows still down 10, drop right now of 0.2%. Dow Industrials down 95, a drop there of 0.3%. 10-years up 11/30 seconds, 10-year yield 1.29%. Equities lower today as mixed economic data keeps investors on edge about the timing of stimulus tapering, even as the relentless spread of the COVID-19 Delta variant undermines global growth. The European Central Bank will slow the pace of its pandemic bond buying program in the final quarter of this year, a shift President Christine Lagarde insists is not a move heralding a wind down in stimulus for the euro region's still vulnerable recovery. You heard Lagarde live on Bloomberg Radio this morning, and she summed it up like this.
The lady isn't tapering. Because what we are doing is recalibrating PEP, which I'll remind you is the Pandemic Emergency Purchase Program, and we are recalibrating just as we did back in December and back in March.
Airline stocks flying higher this afternoon, even as United, Southwest, and other carriers say a surge in coronavirus infections is likely to hamper their recovery, with customer bookings slowing in recent weeks. Right now, UAL up by 2.1%. Shares of American Airlines Group up 5%. Delta up 3.5%. Southwest up by 2.7%. Recapping, NASDAQ higher, S&P lower, down 10 now, drop of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's a Bloomberg Business Week. Tim Stenovic and Sonali Basak live in the Bloomberg Interactive Brokers studio in New York. Shares of Tencent, ADRs of Tencent, down more than 3% right now. They sank in Hong Kong, trading 8.5% on Thursday after national authorities reportedly told the firm that they will freeze the approval of new online games. The stock is down almost 15% for the year. In the meantime, China's factory gate inflation accelerated to a 13-year high. That adds to the pressure on global consumer prices, which have been pushed up by a commodities boom, soaring shipping costs, and an uneven economic recovery from the pandemic. There's no better voice out there to talk to us about all of these issues happening in China than Tom Orlik, chief economist at Bloomberg Economics, joining us on the phone now from Washington, D.C. Tom, where do you want to start?
So much to talk about.
There is.
I think that the Tencent story, to me, is very striking. We've all now heard the phrase from Xi Jinping, common prosperity, the new buzzword in China. I think what we continue to find out is how broad that common prosperity agenda is. Less gaming time for kids, stricter controls on property speculators, essentially turning the entire private education sector into a non-profit sector. Where will they go next? And what are the implications of this sweeping crackdown on private sector entrepreneurs for China's long-term growth prospects? I think these are some big questions.
Speaking of how widespread these crackdowns can be, do you have any indication, Tom, that this is going to go beyond companies that are in the education space? We already see some degree of that, but is everyone impacted here is the big question.
So I think that's a really good question, Sonali. I mean, underpinning this appears to be a philosophy, a kind of Chinese Communist Party philosophy that they can intervene in the private sector as they wish to engineer the right social outcomes. So we've already seen that in gaming, we've seen it in education, we've seen it in property. Other sectors where there's a potential application, well, healthcare may be near the top of the list. private healthcare providers could well find themselves under the beady eye of China's regulators if this crackdown continues.
I want to go back to something that you said just a few minutes ago, Tom. The implications that this means for the economic implications that it has for economic growth in the country. If the idea is common prosperity, then does hindering these companies' growth, does that actually help more people find prosperity?
So if we think about where the excitement has been in the Chinese economy in the last decade, it's not been in the state sector, right? No one is excited about the big state oil companies or the state metal companies or the state banks. The excitement is really around the Alibabas and the Tencents and the Meituans of the world and their capacity to bring together new technologies and the enormous size of the Chinese market to make some really striking advances which in some respects are sort of quicker and have gone further than those which we've seen from the big US technology companies. So certainly this crackdown on the most innovative bit of the Chinese economy comes with some serious risks attached. Xi Jinping is betting he can divide up the Chinese cake in a more equal way. The risk is he ends up making the Chinese cake smaller with less for everybody.
Well, the question too, Alibaba, Tencent, these are massive companies now. These are not tiny startups that need that extra space. Is there some parallel to be drawn, if any, with what's happening with some of these larger giants and what we're seeing in the US with the concern about how big our tech giants have gotten?
Yeah, I think that's absolutely right, Shanali. This is not just a China story. Sort of progressive economics, concern about massive tech monopolies and the outsized power they wield in the markets is not confined to China. We hear about it here in Washington, D.C. We hear about it in Brussels as well. What's different, of course, is that when China decides to do something about it, well, China's not a democracy. China's a single-party state. They can get out the big regulatory stick and start whacking people. And we're seeing that happening right now, and that's what's alarming the markets.
Tom, we can't let you leave without talking about factory inflation in China surging, that adding pressure to global prices. The factory gate inflation in China accelerated to a 13-year high. Economic implications of that, not just in China, but here in the United States and for investors too.
So we've got the PPI hitting 9.5% year on year in China. That's the highest level since the fourth quarter of 2008. The big question, of course, is not what happens to China's factory prices, but what are the implications of that for consumer prices in China and in the rest of the world? Here in the United States, the Federal Reserve Chair Jay Powell has been making the case that inflation is transitory and we're going to start seeing pressure come down in the final months of the year. And once we get into 2022, inflation will be much closer to the Fed's 2% target. But if we see factory prices from China staying really high, if we start to see that washing through the system, well, maybe we get another transitory shock to U.S. consumer prices. And if prices stay uncomfortably high into 2021, into the beginning of 2022, well, that makes life much, much more complicated for the Fed.
What's your cutoff, just in the 30 seconds that we have? What do you anticipate as far as the way that it affects U.S. prices? When does that actually become transitory?
So our base case is that we've had 5% plus inflation over the summer. As we get into the fourth quarter, that starts to edge down, and into 2022, because of the high base effect from 2021, U.S. prices are actually below the Fed's target.
Okay.
What the Chinese PPI number is telling us is that there are risks to that scenario. Falling inflation is far from a foregone conclusion.
Tom Orlik, Chief Economist at Bloomberg Economics. We love it when you join us. Thank you so much for taking the time. He joins us on the phone from Washington, D.C. Let's stay in Washington, D.C. and go to Nancy Lyons for a check of the latest with world and national news. Hey there, Nance.
Hey, Tim. The Justice Department says it is filing a lawsuit against Texas arguing the state's new abortion law was enacted in open defiance of the Constitution. The lawsuit says it is settled constitutional law that a state may not prohibit any woman from making the ultimate decision to terminate her pregnancy before viability. House Democrats are working on a $3.5 trillion budget package at the heart of President Biden's legislative agenda. Massachusetts Democrat Richard Neal says the measure aims to improve health care. Texas Republican Kevin Brady calls it wasteful spending.
Speaker Pelosi and House Democrats begin ramming through trillions of wasteful spending and crippling tax hikes that will drive prices up even higher.
Brady is also critical on the lack of COVID spending in the package. Democrats are hoping to push the measure through over the coming weeks. Inflation has become a political issue, with the White House looking for remedies and the Federal Reserve keeping watch.
The surge in consumer demand, coupled with shortages of critical supplies, that imbalance is being corrected, Seth Carpenter, chief economist of Morgan Stanley, said in a Bloomberg interview.
The inflation in physical goods really is being driven by supply chain disruptions. We've heard about that for a long time. It seems like most of those supply chains are starting to get a little bit better, and we think we've actually peaked in the U.S. when it comes to inflation now.
Carpenter said while rents are going up, that resumes a pre-pandemic trend, and year-over-year overall inflation may end up in the 2% range. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thank you so much for that update, Nancy Lyons. Shonali Bassick and Tim Stanovic live in the Bloomberg Interactive Broker Studio in New York. Shonali, what a difference a few years makes for the once high-flying e-cigarette company Juul. If we were talking about Juul just a few years ago, we would be talking about it in the context of it being one of the most highly valued private companies in the United States.
It was certainly one of the most exciting startups, and every major company in that industry, right? You remember the debacle with Altria a couple of years ago, wanted a piece of the pie.
And Altria got one.
Yes.
They got it through Juul. They bought a 35% stake in it.
So, but now this is where we are now, right? This is why we're talking about this, that the FDA has told some small companies to pull e-cigarettes from the U.S. market. That's according to Dow Jones. So what is the future of a company like Juul?
Yeah, that's the big question, and it is among the most read stories on the Bloomberg terminal today. It's a story by Jennifer Maloney from the Wall Street Journal Dow Jones, saying that the FDA is looking for more time to decide the fate of Juul. And I'll read directly from the article here. The FDA faces a court-mandated Thursday deadline to respond to applications from Juul and other e-cigarette makers who had to submit their products for review to keep them on the U.S. market. The agency has told some small companies that their e-cigarettes and vaping liquids can't be sold. More than 500 companies filed applications for some 6.5 million products. It's just really fascinating, Shonali, to see, and I mean, just anecdotally walking around New York City a few years ago, those little Juul pods were everywhere on the ground. And I don't know to what extent people have stopped Juuling, but the concerns about health, the regulatory enforcement and action that the government took to try to prevent kids from Juuling, which has been a huge, huge epidemic, have all hit the company and certainly hit the company's valuation as well.
Yeah, absolutely. The FDA really taking a lot of moves here in terms of denying marketing applications for e-cigarette products just weeks ago, and now this latest move, which is pulling certain cigarettes from the market overall.
Yeah, check out this article, among the most read on the Bloomberg terminal, again by Jennifer Maloney at the Wall Street Journal Dow Jones. This is Bloomberg Business Week, and this is Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got the Dow, the S&P, NASDAQ lower. NASDAQ have been fluctuating between gains and losses, but right now red on the screen, a down Thursday. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading in the red today after a positive start. Dow's currently down 133 points. S&P's dropped 14. NASDAQ is lower by 8. The U.S. 10-year yield at 1.3%. Gold is little change. Transports fall 148. And among the main 11 S&P sectors, only financials and materials were in the green. Real estate and healthcare were under pressure. Leaders to the upside in the Dow, Nike and Boeing, while Merck, J&J, and Amgen led to the downside. And after earnings, Lululemon rose as much as 14%. In other news, Biogen fell after management said their Alzheimer's drug launch was slower than expected. And wrapping things up, Zscaler reports after the bell. Live from the First Breaking News Desk on Bill Maloney. Charlie.
Okay, we thank you very much, Bill, and to hear live breaking news over your Bloomberg Type Squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, a handful of Amazon stories that we want to get to this afternoon. The company is debuting a TV line, stepping up a fight with Roku, with Google, and more. Also, Amazon spending $1.2 billion on employee tuition and courses. Joining us now is probably the person who knows the most about Amazon when it comes to reporting. Is Spencer Soper, technology and e-commerce reporter at Bloomberg News. He joins us on the phone from Seattle. Spencer, excuse me, it's great to have you back on the show. A week ago, we were talking to you about another Amazon story that had labor shortage written all over it. That story was about Amazon encouraging its trucking companies, these last mile delivery companies, these independent contractors, not to test for marijuana. Now, Amazon out with the news today that the company is spending $1.2 billion on employee tuition and courses after Walmart and Target announced similar education perks. Is this all about attracting and retaining talent?
Yeah, that's all that is. There's basically a perks race, and so just like with the not testing people for marijuana was a way to expand the labor pool without necessarily raising wages. This is another way to offer a perk. It gets a lot of headlines. It can sound very appealing to people, but it's likely not as costly as raising wages. Only a portion of the people are going to take full advantage of the program.
So interesting because part of these training perks are in fields that don't apply to Amazon, like nursing and trucking, right?
Yeah, they've offered those for quite some time. Initially, Amazon, and that goes back several years, where they targeted high demand industries. Trucking obviously would benefit Amazon, even if not directly employed by Amazon. Nursing, not as much. But Amazon said, if we're putting money into you, we want to make sure it's for a career that we know is in demand. Now it's more loose with the definitions and not necessarily just targeting those in demand jobs. But it's basically just Amazon keeping up with the Joneses here.
Help me understand what the benefit is here. Why is it more beneficial for Amazon to put money into employees who are willing to retrain themselves for a career, including a career that might not be at Amazon, rather than to raise wages and retain people?
Well, one, it's probably going to cost less in terms of, they're calibrating how many people actually participate. And then Amazon isn't really, in terms of the warehouse workers, it's not expecting people to stay 20, 30 years or anything. If they can get 2-3 years out of you and you leave and then they plug someone else in, that's perfectly fine for Amazon, especially since they can reset wages on that new hire. So I think that for them, it can help with the churn, try to reduce that churn. If someone comes in, even if they're not crazy about the job, but they're getting some sort of tuition-based support, that will compel them to remain for a period of time to continue with their schooling and then leave. Whereas if they don't have that incentive to stay at all, people frequently will quit in the middle of their shift.
We got the JOLTS economic data yesterday from the Labor Department, and it shows that there is this mismatch when it comes to open positions and jobs available. And I'm wondering how Amazon is doing navigating that, because as you mentioned, Walmart in this story, Walmart and Target have announced similar education perks. What's the talent war that's going on when it comes to Amazon hiring?
I mean, we'll see what their recruiting needs are for the fourth quarter, and whether they're able to fill those positions. I mean, generally, you will see them dial up the wages, and they can even do that geographically. So it won't necessarily be on a national scale. They will moderate their wages depending on the geographic market. But right now, yes, I mean, basically all employers are in the same position. They need to get people in to meet demand, and they're trying to find ways to do that without necessarily just pushing up wages, because once you give that higher wage, it's very difficult to take it back.
Hey, Spencer, I want to get to this other story just in the last 2 minutes that we have with you about Amazon selling a TV line, stepping up a fight with Roku and Google. The company introducing its first line of TVs today. It's going to sell a model, the Omni. It starts at $409, and a 4 Series, $369.99 and up, just in time for the holiday season. What's the strategy with these smart TVs here?
Well, I think you really have to look at it as Amazon's latest ploy to get voice activation into the home, and look beyond simply a TV. They've really pushed their voice-activated speakers and really want to get those people, more accustomed to using its voice-activated technology, the Alexa platform. And so this is simply another way to do that and have all of that baked into the television rather than relying on other companies to provide it in their TVs. So it's basically another step along that path. Amazon's really wants people to engage with its voice activation platform, and it really wants a place in your home, because if you think like Google has the Android platform, on mobile devices, and Apple has iPhones, Amazon really doesn't have that kind of connection with people, so it's hoping to make that connection in people's homes.
We only have about 30 seconds left here, but do you think Amazon can be successful in competing with others in the television business?
Yeah, absolutely. I mean, they can offer an affordable, good quality television. Whether people engage with the voice activation is another question, but they have that long-term goal of wanting people to interact with it and potentially shop with it. That's their motivation. But they can absolutely be competitive. A lot of the question is going to be, will they let people down? Because these things, generally, the low-cost televisions, there's limited supply.
Yeah, that's a really good point, especially one to end on. Spencer Soper, thank you so much for taking the time. Spencer is technology and e-commerce reporter for Bloomberg News. He joins us on the phone from Seattle. Check out Spencer's latest story on the Bloomberg terminal and at Bloomberg.com about Amazon spending $1.2 billion on employee tuition. Also, Lucas Shaw's story about Amazon's new TVs. This is Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stennebeck and Shonali Basak live in the Bloomberg Interactive Broker Studio in New York. Shonali, you have not had the pleasure of getting the song of the day right or wrong yet, but that's what's coming up next. Have you been practicing? I didn't know there was a song. Okay, she didn't know there was a song of the day. So, wow. We're gonna pretend you didn't say that. Okay, we're gonna just go back in time. We're gonna pretend you didn't say that. Dave Wilson was not listening at all. Okay. Let's get a check of the trading day with Charlie Pellet, and then we'll practice. Thanks, Charlie.
All right, here's what's going on. Do you want to begin with some headlines out of Washington? President Biden is going to be ordering all executive branch employees, federal contractors, and millions of healthcare workers to be vaccinated against the coronavirus and direct his administration to issue new rules saying large private employers must require shots or testing. The moves will be outlined by the president in a speech at 5 p.m. Wall Street time. We will have that for you live coming up right here on Bloomberg Radio. American Express, meanwhile, is delaying its plans for returning its workers to the office, citing the spread of the highly contagious Delta variant. Microsoft is abandoning plans for a full return to work and says it will not forecast a new date for reopening of its U.S. work sites. How soon until we can finally drop the masks? Dr. Jennifer Nuzzo is a senior scholar at the Johns Hopkins Bloomberg School of Public Health.
You know, we're getting closer to that point. I mean, one of the biggest things that vaccines do is they decouple the cases that we see from the deaths. And once we're no longer acutely worried about hospital systems being overwhelmed or people winding up severely ill or dying from this virus, I think the calculus of whether or not people need to wear masks changes.
Dr. Nuzzo with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Mixed day for the vaccine stocks that we follow. Pfizer, for example, down 1.2%. Its German partner, BioNTech, up 4%. AstraZeneca's ADR is down 1.4%. Moderna out of Cambridge surging now by 8.5%. J&J Johnson & Johnson down 2.3%. Down day on Wall Street. NASDAQ has been swinging between gains and losses. Right now, a 1-point loss, down less than 0.1%. Stocks dropping with worries mounting over growth. S&P down 12, drop of 0.3. The Dow down 109, down 0.3%. 10-year up 11.30. 10-year yield 1.29%. Spot gold up 0.3%. 17.94 the ounce. And West Texas Intermediate crude down 1.8%, 68.03 a barrel. Recapping, S&P lower by 12, down 0.3. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Bloomberg.
It ain't happening, Tim. And Shonali is silent.
Yeah, Shonali's like not even.
I mean, I'm thinking about the stock of the hour.
So it turns out Shonali's no help for my terrible music knowledge of the 70s, 80s, and 90s.
Y'all were around, maybe young, when the Berlin Wall fell.
Oh yeah, I remember. I remember
that song became an anthem when the Berlin Wall fell.
Oh.
Why is that? Well, the song is Winds of Change, and it's by a German band, Scorpions.
Okay.
There was no way I was going to get that.
That's okay. You're forgiven. It's your first day.
I'll prepare for next time. Maybe you guys will let me choose the song.
No, you can't choose.
Deal.
Yes.
Oh,
it will
wow.
be
Is she in tomorrow?
Dead with some John Mayer in between.
Oh, fine, whatever. I could get John Mayer.
He does certainly know how to play that guitar. Hey, Dave, what's the connection to today's chart?
Germany.
Oh,
you go through the 30 companies in the DAX index, which is the country's benchmark stock index. You add up their market value, and for the past year and a half, basically, you haven't managed to catch up to the value of Amazon.com. You know, it's just something that You know, I was looking at a report yesterday from Andrew Garthwaite, who's a global strategist over at Credit Suisse, and he's, you know, basically telling people, you know, don't have a lot of U.S. stocks relative to like benchmark weights. And one of the reasons he just said in passing, you know, it is concerning, as he wrote it, that Amazon is more value than has more market value than all 30 stocks in the DAX. So I went back and ran the chart, and sure enough, you know, you go back to March of last year when things were falling apart, and that's when it started. That's when Amazon overtook the DAX. And bear in mind, you know, we're talking about all kinds of companies that people know. You think about the software maker SAP, you think about the drug maker Bayer, automakers, you know, BMW for starters.
Heard of it?
Yeah.
Yeah, these are big companies we're talking about.
Well, they're not that big. That's the thing. None of them even get to $200 billion in market value.
So is the idea
Amazon.
is the idea here that they're undervalued, or is the idea that Amazon is just so big that this is a way to contextualize that?
Both, if you think about it. I mean, clearly the German market has to some extent been left behind over the last several years. You know, you're thinking about a country where SAP at the moment is the biggest by market value, and I look at my trusty Bloomberg terminal, and it's less than 180 billion.
I mean, when we talk about Germany, I have a soft spot for Germany because I was the Deutsche Bank beat reporter out of the United States for some time, and Deutsche Bank now is about a 26-euro company, right? It's small, right? It's very, very, very small, 26 francs. So, you know, to your point, if you're a German bank banking this is a huge economy in Europe, right? And to think about one single U.S. company being bigger than the entire.
And not even the biggest U.S. company. Let's bear in mind, you know, you have Apple and you have Microsoft above $2 trillion. And, you know, Amazon, you know, not even at that level. As we speak, 1.77 trillion. But I digress. If you want to see this chart, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Okay, we failed the song of the day. We got the chart of the day. Give us the stock of the day.
You probably know something about avocados, right?
Yeah, I do.
Okay, Calavo Growers is the stock of the day. The ticker is CVGW, and they are indeed an avocado supplier. Had numbers out late yesterday for their latest fiscal quarter that did not go over well at all. Gross margin, profitability gauge, less than 3%, lowest in more than a decade, according to our data. Oh, and that's not all. The CEO resigned, retired, as they put it, but it was effective today. And so they bring in a board member to be interim CEO. Now, bear in mind, a couple months ago, the chief financial officer left and was replaced by another board member. Well, that person's going back to the board, and the interim CEO is also going to be the interim CFO. You put that all together, stock's down 16%. That's lowest price in 6.5 years.
Look for Dave's Stock of the Day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter @TheOneDave. Dave Wilson, stocks editor at Bloomberg News. Go have an avocado. Thanks, Dave. Let's get a check of the latest world and national news. Nancy Lyons is standing by in D.C. Hey there, Nance.
Hey, Tim. Attorney General Merrick Garland says the federal government is suing Texas over its new law that effectively bans abortions in the state after 6 weeks.
The act is clearly unconstitutional under long-standing Supreme Court precedent.
Garland calls it a GOP scheme to construct the bill in a way that puts the onus on private citizens to enforce the ban. He says it's a naked attempt to circumvent Supreme Court precedent and the U.S. Constitution. He says states could use similar language to shield other attempts to violate individual rights. President Biden this afternoon will be unveiling a 6-pronged plan for dealing with the surge in COVID cases. Bloomberg's Washington correspondent Joe Matthews says Biden will mandate all government employees be vaccinated.
It is being mandated that all executive branch federal workers and contractors who work with them will have to get a vaccine. The difference between now and the last time the president talked about this is there will be no opt-out.
Matthews says that means you cannot opt for weekly tests in place of a vaccine. He You'll be able to listen to President Biden right here on Bloomberg Radio at 5 p.m. Wall Street time. Researchers say federal government data significantly understated the ravages of COVID in nursing homes last year. Official numbers from the CDC are missing about 12% of COVID cases. That's according to new estimates published in the Journal of the American Medical Association. A Harvard researcher believes nursing home deaths account for about 30% of all U.S. coronavirus fatalities. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Whenever there's a story about real estate, specifically New York City real estate, it moves to the top of the Bloomberg terminal in terms of most read. Today is no different. Manhattan rents, Shonali, rise again, but only with doormen in the building. So a really interesting caveat here. The median price of those apartments, those are the ones in fancier towers with more amenities, that jumped 8.1% in August from a year earlier to $4,160. That's according to a report today by the appraiser Miller Samuel. Also the broker Doug Elliman Real Estate. It was the biggest annual increase for doorman rents since 2012.
It's very interesting, as we know that all real estate has not come back at the same pace. You have an issue, for example, with condo buildings. That's been an issue all year around. You also see a difference when people are behind on rent here, too. There's a difference between people who can buy high-end homes and many now who are billions of dollars behind. And so it's really important to recognize that South Carolina, Georgia, New York, West Virginia, Mississippi, more than 20% of renters are late with payments.
Yeah, it's a really important one to keep an eye on because of the Supreme Court's overturning of the eviction moratoriums ban from President Biden, and also because of the way that supplemental unemployment insurance benefits have expired for millions of Americans. So very important to keep an eye on those figures. What you said about the way that real estate has changed during the pandemic, I think is really important. It's really been a tale of two different types of real estate. We've seen this push to the suburbs, and at least, thinking about a little more than a year ago, people were leaving New York City and Manhattan specifically behind. We did see prices fall, but that also gave an opportunity for people to move to the city, perhaps for the first time. And in the early part of the year, Shonali, we saw a lot of stories about young people seeing this as the opportunity, the time to take advantage of those cheaper rents.
Absolutely, but you have service workers, contract employees, freelancers who are finding it very difficult to return to New York City with rents rising.
Yeah, check out these stories, both available at Bloomberg.com and on the Bloomberg terminal. This is Bloomberg Radio, and this is Bloomberg Business Week.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell. It is a down Thursday right now. Red on the screen. NASDAQ has been fluctuating between gains and losses, but right now, red down 3 points. Lower, little change, down less than 0.1%. S&P down 12 points now, a drop there of 0.3%. Dow Industrials down 90, a drop also of 0.3%. Stocks moving lower as mixed economic data keeps investors on edge about the timing of stimulus tapering, even as the relentless spread of the COVID-19 Delta variant undermines global growth. S&P on track for a fourth straight decline. 10 years up 11.30 seconds, 10-year yield 1.29%. Gold, spot gold up 0.4%, now $17.95 the ounce. West Texas Intermediate crude down 1.8%, $68.05 a barrel. After earnings, Lululemon Athletica up 10.9% right now. RH, the old Restoration Hardware, up 8.3%. GameStop swinging between gains and losses. GameStop up right now, little changed, up 0.2%. Recapping stocks lower. S&P down 13, drop there of 0.3%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is the drive to the close. We are just over 10 minutes away from the close of trading on this Thursday, September 9th, 2021. U.S. equities lower across the board. The Dow down by 0.3%, as is the S&P 500. The NASDAQ lower by just about 0.1%. Let's get right into it with Noreen Beeman, president at Orion Advisor Solutions. There's over $50 billion in assets under management. Joins us on the phone from New Jersey. Noreen, how you doing? Noreen, can you hear me?
Yes, I can hear you. Can you hear me?
Yeah, I can hear you. How are you?
Oh, sorry. I'm doing great, and thank you so much for having me.
Yeah, thanks so much for joining us. Hey, on a day like today, where you see for much of the morning the S&P 500 in positive territory, and then drop into negative territory and just try to claw its way back into the green, what do you think what are investors really trying to digest?
There's so much news. When you think about what's going on, we're living still through this pandemic and the Delta variant, and then you see, weather patterns all across the country and just updates on news. So I think what we're really facing is so much negative news, and then you see what's going on with the stimulus. So this is an opportunity for investors actually to just breathe through that and think through, like, what are their goals, what are their objectives, and really think about more of the long term and not make changes based on what's currently going on in the market environment.
Well, it is interesting because we are seeing on a day when we're talking about a fourth consecutive decline to really keep things into perspective, right? The S&P 500 still year to date is up by 19.7%. Is there any room for it to go higher more this year?
I think we still have not seen the earnings growth that we're going to get once we come out of this pandemic. When you think of we've almost had so much stimulus that was put into the market that created this environment that the markets were still positive, but that earnings growth, I think we see going forward will be really, I think, an opportunity to continue to go higher. But again, it's a multi-class portfolio. What are your goals? What are your objectives? What is the money's job? At the end of the day, the money has a job to do, and that's a particular interest for each individual investor.
There's a lot of noise that's coming up in the next couple of months. We have a lot of headlines from Washington. There's a variant. How should investors be wary, and where should they be paying attention to what some of the negative catalysts might be for the market?
So when you think of negative catalysts, it's clearly with a lot of the news that is coming out of Washington, and there's going to be a lot of news, and we need to stay focused on what are the outcomes once they actually happen. There's going to be a lot of information that's going to be flowing prior to we actually get to a deal, whether we're looking at infrastructure, what are we looking at with the tax opportunities, so there may be changes to the tax code. So what are we looking at for there? Staying focused on what your end game is as an end investor and not really reacting. And even though, like we said, the markets have been up pretty significantly this year, what are your gains in your portfolio? How are you thinking about that going forward?
Hey, how should investors in U.S. equities read into what the European Central Bank did, what President Christine Lagarde did with slowing the crisis stimulus, but saying, hey, this is not a taper?
You know, it's going to be interesting to watch what's going on in Washington and thinking about more of us as a global, in this global environment. But I think we just have to take a moment to digest that and thinking through clearly what are the other parts of the economy that are going to be changing given all that's going on. It's an unprecedented experience that we're all living through. This pandemic has, oh my goodness, how much it's changed all of our lives. And how do you think we get through this and get out of the other side with that resiliency that we've learned over the past 18 months, almost 2 years?
Noreen, speaking of resilience, if the market does, say, hit a snag, that 5% or even 15% drop that some strategists are expecting, how should investors prepare themselves for something like that?
You know, I've been at this for over 32 years, and we've seen markets go up and markets go down. And if you continue with a good plan, and you work through that process, you will come out the other side. Unfortunately, it's those bad decisions that are made behaviorally. That's one of the things that Orion we've done is we've brought behavioral finance into the model because we're thinking about how do we as individuals react. You know, the dynamic of an institutional investor doing better than the individual investor. Our job is to help kind of bridge that gap and keep that behavioral alpha in those portfolios and helping people not make bad decisions at the wrong time.
Can you talk a little bit about what you do at Orion Advisor Solutions? I think a lot of people might not be familiar with what Wealth Tech is and what Wealth Tech does.
What's exciting about what we're doing at Orion Advisor Solutions is, again, we have a little over $55 billion in assets under management, but we serve in assets under advisement $1.7 trillion, and that's through our Wealth Tech. And it's really a matter of allowing the tools that digitize the experience, helping financial advisors. We work with financial advisors and helping them serve their end investor clients. And when you think about the tools that everyone uses today, those apps that we use to help improve our behaviors is one of those things that we're working on is how do we get everything you need to know into an app that will allow you to make good investment decisions, working with your financial advisor. How does it take that friction out of that experience? So the Wealth Tech opportunity now is pretty exciting, and I'm really glad to be a part of it.
Well, at the end of the day, does this Wealth Tech lower fees for consumers? I think when a lot of people talk to their financial advisors or even work with their banks, what they're finding is they hit a fee with their advisor, then they hit another fee when it comes to getting into some of these products, and in some cases, a third fee in between, depending on what product you get into. So some of this is very complicated for consumers. Can this be streamlined by any means through what you do?
So I think what's really important is full disclosure. We come from a position of allowing you to understand what fees are being charged so that you as a consumer can make an informed decision. And, fees are only an issue in absence of value, and I know that is very cliche, but when you think of behavior and you think of access, and I think that's what technology has done, it's really broken down barriers. Go back 20 years, go back 10 years, even back 2 years, we've broken down barriers to allow for more consumers to get better advice and be invested in the stock market.
Hey, Noreen, back to the markets. What's the next catalyst that sends stocks higher or lower? Is there anything that happens before the FOMC meeting later this month?
I think we have to keep watching for the news out of Washington in terms of where are they going in terms of infrastructure, what's really going to happen, and how we pay for that. I think that's going to have some significant, input to what's going on with the market, and then we'll have to see what happens post that meeting.
That meeting, this is what's complicated to me, and the smartest of investors are talking about it. How fragile is the stock market in relation to what happens with the Fed's decisions?
And Noreen, we only have about 30 seconds left.
I think that the markets will react in that day, and then they will start to see where the positive and negatives that they can take there. So I think we all should take a deep breath. We're going to see a lot of news coming out there, and I'm always one that if you stay the course, you put a good plan in place, that you just go after it and be patient.
A deep breath, always good advice no matter the scenario. Noreen Beeman, president at Orion Advisor Solutions. She's got over $50 billion in assets under management, joining us on the phone from New Jersey. Well, we are just a couple of minutes away from the close of trading on this Thursday, September 9th, 2021. Remember, it is a shortened trading week, but not quite to Friday yet. The Dow down by 0.4%, the S&P 500 down by a little more than 0.4%, the NASDAQ lower by more than 0.2%. Still, though, keep in mind, year to date, we're higher by 19.6% on the S&P 500. If we do close in the red in the S&P 500, then we will see 4 consecutive days of declines. Coming up next, it's our Bloomberg Beyond the Bell, our cross-platform coverage of the market close with our colleagues from Bloomberg TV. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs, counting you down to the closing bell, here to help take us beyond the bell. It's our global simulcast, joined now by Tim Stenovic and Sonali Basak, bringing together our Bloomberg television, radio, and YouTube audiences worldwide to parse the crucial moments of the day. And Tim, I guess the moment of the day, I think, really seems to center around, I guess, nothing. The idea here that the market's not going anywhere.
Yeah, that's true. For much of the day, the S&P 500 was in positive territory, and there was really nothing discernible that sent it lower in the afternoon, but it still wasn't able to get off of those lows. Looking like it's going to close off of those lows, but still, the S&P 500, wow, actually now moving a little lower, down 0.4%. I think equity investors, Sonali, are dealing with mixed economic data, right? On the one hand, they get some pretty good news when it comes to those initial jobless claims, falling last week by the most since late June. But as the labor market continues to recover, we're getting the Fed Beige Book survey yesterday and returns to the office delayed. Look what happened with Amex. Microsoft just throwing it out the window, Sonali?
Yeah, absolutely. And when you look at the different gainers and losers in this kind of market, there's no single narrative to tell you. We see a lot of the reopening type trades that are doing fairly all right, but the market generally lower. And at the same time, we see not just the S&P, but the Dow also lower. Yeah. I've got to mention my favorite moment of the day was Cliff Asness tweeting about Dow 3600 and whether we'd ever get there. 36,000.
36,000. If he said 3,600, that would be
thousand.
Mother of all calls here. All right, here we are getting the closing bells here in New York. People clapping, bells ringing. The Dow Jones Industrial Average a long way off from 3,600. Looks like it's going to close right below 35,000 here, down 154 points, or about 0.4%. Of course, as always, waiting for these numbers to settle, but you get the general picture here. S&P 500 down 0.5%, 44.92, roughly where it stands right now as we wait for these numbers to settle. NASDAQ Composite down 38 points, or 0.2%. The Russell 2000, which had been in the green for a good portion of the day, looked like it was going to outperform to the upside here. It's still outperforming, but it's going to close in the red, down less than 0.1% here. Just less than 1 point here, if my math is correct. Carry the one.
Yeah, it's still red. Okay, it's still red. There we go. You got it. That's correct, Romaine.
Why he studies the CFA team.
Yeah, we'll have to go to Taylor for that one. Hey, look, I think...
Well, I'm sorry, can we go to Sonali? Sonali, you just did like a whole thing on like, was it CFA better than MBA? Better than
How are you listening to the radio while you were on TV?
This was on Twitter Spaces. I'm a man of many talents, Tim. Multitasking. How did that go, Sonali?
Multi-social mediating.
Well, I couldn't tell you the right price of the Dow, so clearly not too well.
Oh, we love you, Sonali.
Carry 1-0, carry the one. It's okay. What do you got for us?
Thank you, Tim. Let me attempt to save us all as we continue that debate, MBA versus CFA online. We'll continue the debate between the bulls and the bears. It happens here for our radio audience as we do every day, the sector winners and the sector losers. There is some green on the screen, but it doesn't look strong. There's a lot of tepid and unchness going on. And yet it was interesting that you have banks and insurance and energy, that classic reflationary trade. You're up 0.5% to up more than 1%. But really the story was much on the downside today. It was transportation, it's real estate, it's food and beverage, it's household products. How much of that really feels defensive, Some of this was a bond story that we got today, even though bonds were rallying and yields were lower. Tim, this was really interesting that you did get a sense really here of some of the big losses.
Yeah, and look, as you mentioned, and we're going to talk about this a little later, Taylor, but crucial moments of the day, I think, came before the American markets opened, at least the American equity markets opened. But speaking of the American equity market, Shonali, take us through what you're seeing in the green.
Yeah, so we have a few big names in the green, Moderna being chief among them, nearly an 8% rally today, Tim. You see vaccines really being mandated by a lot of companies here, and that effort continuing to take off. But number 2 in the S&P, we have American Airlines. This is what I was talking about a little bit earlier, about the idea that people are getting back on planes and numbers doing all right as far as this summer goes along. You also have this company named Gevo, which is a very big gainer. It is up pretty significantly, and that is on its intent to pursue sustainable aviation fuel investments alongside Chevron. So we have some things there getting the country moving, but let's see if those gains stick. These are massive gains on a down day.
Uh-oh, Tim.
All right, I'll take full. I take full responsibility for what our TV and YouTube viewers see. Let's hold off. So we'll start with Tencent as my decliners, down 2.84% on the day today. Shares lower as investors fear that Chinese regulators are preparing to tighten the grip dramatically on gaming companies. South China Post, we've been reporting on this all day. South China Morning Post reported that China will slow down approval for online games. Shares of Tencent sank 8.5% today in Hong Kong. ADRs down 2.84% today here in the U.S. Pour one out, please, for Boston Beer Company, guys. Sam Adams, the parent company the parent company of Sam Adams and Truly Hard Seltzer, withdrew its annual forecast yesterday, citing a severe and unexpected slowdown in the hard seltzer market.
Guess how many hard seltzers there are, Tim? Romaine was doing
I think it was 100 million fewer cases than the volumes estimated in May of 2021.
There are something like 65 brands.
You mean there were only 10 brands on shelves back in 2018. Now there are more than 65 of them out there. And this is the glut, Tim. This is the big glut. I don't know if you have this on. This is value add. Don't laugh. This is serious business.
Tim, he found this on
and did you know,
Google,
Tim, there were
way.
reverberations today because you had companies like Ball Corp, which makes the cans, actually down today by about 1% because of concerns here that there's this big glut. Silgan, Crown Holdings. Crown Holdings was down 3% today.
I should have picked some of those as my last.
GameStop.
I should have picked one of those instead of GameStop. But to be fair, GameStop was lower most of the day. In fact, it was down more than 10% earlier in the day. We covered the earnings yesterday, but hey, we talked a little bit about getting some clarity on that turnaround plan. Investors didn't get that on that earnings call, which went under 10 minutes. They didn't even hear from Ryan Cohen. No questions, but shares recovered to finish in the green higher by close to 0.2%.
Can't keep a good meme stock down. GameStop up. Meanwhile, what's also up is basically most of the FX markets versus the US dollar. Actually, dollar index off by about 0.2%. This on a day where yields go lower. That bond auction, I know Taylor's going to talk about it, but we see the British pound off by 0.5%. We see the Swiss franc also powering higher 0.6%. The euro was even higher. That, as we see the ECB start to push back against stimulus, start to talk about reducing their bond purchases, but don't call it tapering. Madame Lagarde doesn't want you to call it tapering. Meanwhile, we're looking at, also on the downside, dollar goes lower, but actually so too does oil, off by more than 2%. Now remember, this is China, big step coming from China, trying to reduce the prices there, trying to add to its really exercising some of its oil reserves, pumping into the system. Supply goes higher, WTI crude goes lower. $67 is where we trade. Brent crude off by 1.8%, $71 is where we trade. We already had settlement. Steel on the higher side. Aluminium, and we wish we had to show that up to a 13-year high. Tell that to Bull Corp at the moment. Meanwhile, also Nat Gas on a tour. Huh?
Is that not on the board?
It's not on the board. We need to sometimes click it. You need to click to show the higher ones, unfortunately. But go to GMM and go and play with it. Aluminium up to 13-year high. And meanwhile, a sea of green when you look at sovereign bonds. Money poured into European bonds on the back of the ECB, moving back from their bond purchases, but not as much as many had thought.
The good news is we did aluminium on the European close today, Caroline, so we got you covered.
And you can say aluminium,
too.
yeah.
Let's take a look at bond yields, Romaine, quickly before we migrate back to the earnings movement. We are down 4 to 7 basis points across the board, below a 130, below a 190 on 10s and 30s.
All right, Affirm earnings out here. The shares are really all over the map here. They were down, then they're up, relatively flat here. It looks like they did beat revenue coming in at about 261.8 million. The street was looking for about 226.7. That's the average. Loss per share coming in at about 48 cents a share here. Gross merchandise volume, a key number that a lot of people look at, $2.5 billion. That's up about 8.7%, a quarter over quarter. Overall, these numbers, at least on the first glance here, appear to have beaten the street estimates here. We'll keep an eye here on any guidance and forecast. Not really seeing it here. Again, these are your fiscal fourth quarter numbers for Affirm. Shares up about 3%.
Yeah, I'm also keeping an eye on Dave & Buster's reporting earnings after the bell. Those just coming across. The second quarter earnings beating estimates, EPS coming in higher than expected. Shares surging more than 6.5% in after-hours trading. Dave & Buster's net revenue coming in at $377.6 million.
Yeah, really interesting, you guys. I think all as we recap here, we do the horse race of the individual earnings, but it really was a day of some of the economics. Caroline, I think you did it very well with ECB this morning. What that means is you think about maybe a divergence between the global central banks and hints of maybe slowing down that PEP program, but steady as she goes.
I know the ECB managing to walk away from stimulus a little bit, but not affronting the market to too much of a degree.
Is that what Lagarde said?
Lagarde said she's not for tapering.
She said the lady.
The lady
isn't not to Margaret Thatcher.
Yeah, she says.
I think she's taking a leaf out of Margaret Thatcher's book. She will not be for turning. Meanwhile, though,
did that go well for Thatcher?
Eventually, she was basically a decade in power. But we also, though, look at what's happening in China. If you look across the board, this is a global story of whether, production prices through the roof. This is an inflation story, but we're not seeing that the monetary policy is having to change too much on the back of it.
Yeah, it's a great question, this global question of monetary policy. But back here in the U.S., there's still that question about tapering, when it happens, and which asset prices will be most effective. You still see the market shaky without real clarity here.
Yeah, and certainly with those prices continuing to move higher for producers, the question is to what extent does it get passed on to us as consumers, especially as we get to the holiday season, and shipping costs don't seem to be going down whatsoever at all. That's going to do it for our cross-platform coverage of Beyond the Bell. Join us tomorrow, same time, same place on Bloomberg TV, Bloomberg Radio, and on YouTube. Have a great Thursday, everyone. We'll see you tomorrow.
Yeah.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, well, a slew of earnings after the bell. Taking a look at Dave & Buster's, shares higher now by, continuing to move higher by 7.4%. Affirm Holdings, shares higher in after-hours trading right now by 10.8%. We'll have more coverage on those in just a few minutes. In the meantime, let's get a check on the latest world of national news with Nancy Lyons in D.C. Hey there, Nance.
Hey, Tim. The Justice Department has filed a lawsuit to overturn the Texas abortion law after the Supreme Court refused to intervene.
Turning private citizens into bounty hunters to infringe on the rights of women and their doctors, Attorney General Merrick Garland said, is a scheme to nullify the U.S. Constitution and the right to judicial review.
The United States seeks a permanent and preliminary injunction prohibiting enforcement of the statute against the state of Texas, the state's officers, employees and agents, and private parties it has effectively deputized.
Garland said the Texas law also conflicts with federal laws relating to health care and the duties of federal employees who carry out those laws. In Washington, Irv Chapman, Bloomberg Radio.
In about an hour, President Biden will outline his new six-pronged approach to tamp down COVID-19 cases. He's expected to call for vaccination for all federal employees and contractors and require all large private employers to have their workers either vaccinated or tested. Americans are among the estimated 200 people who left Kabul, Afghanistan today on a commercial flight. State Department spokesman Ned Price says the U.S. views the flight to Doha, Qatar as a positive sign from the Taliban government.
Certainly today's departure of this Qatar Airways charter was a welcome step. It is certainly something that we were glad to see happen. As we have said, additional such steps will be similarly greeted not only by the United States, but by the international community.
Price says the U.S. will continue to hold the Taliban to account. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenovic and Shonali Basak live in the Bloomberg Interactive Brokers studio in New York. Shonali, are you a vegetarian?
I am not a vegetarian.
Okay.
However,
okay. Tell me.
I have been scrapping meat.
You have?
Generally.
Oh, that's so interesting. That's like what Beyond Meat is betting on. The reason I'm asking you is because among the most read on the Bloomberg terminal today is a story about McDonald's UK and Ireland testing Beyond Meat that's co-developed, testing a Beyond Meat burger that has been co-developed between McDonald's and Beyond Meat. So why are you ditching meat?
Mostly for health. I feel better when I'm eating more greens and substituting as much as I can, but I haven't substituted it completely. And there's a lot of people that I've met in a similar boat. There's also environmental concerns. I'm scrapping fish too.
Yeah. Oh, it's interesting. I've spoken to Ethan Brown, the co-founder or the founder and CEO of Beyond Meat in the past, and he's talked about people like you being his target audience, right? The idea that, look, this is a meat substitute historically has been one that appeals to people who are vegetarians, but what they want is to just get people to eat less meat and in its place get people to eat meat developed by Beyond Meat. It's a similar story for Impossible Foods, the privately held company that is in the United States among the biggest competitors with Beyond Meat.
It's also exploring vegan cheese blends, sauces and buns. So,
I've had the Beyond Meat sausages. They're really good.
They are. I do have a bunch in my freezer as well. The question is, I'm wondering, is this going to make a healthier McDonald's?
Well, that's the question, and there's a lot of debate about whether or not this is actually healthier because people have pointed to sodium and the idea that this is a very processed food as saying, wait a second, it might be better for the environment, but is it better for me? That's the question. Well, again, the reason we're talking about it is because McDonald's UK and Ireland is going to start a trial for its first ever plant-based burger. It's going to be called, drumroll please,
the McPlant.
There we go. Made in co-development with Beyond Meat, enabling customers to choose a plant-based menu option. Interestingly enough, shares of Beyond Meat finishing the day, it did rally, but when this was announced earlier in the day, but finishing the day still higher by 1.4%. Check out more stories about Beyond Meat and other meat substitutes at Bloomberg.com and, of course, on the Bloomberg terminal. This is Bloomberg Radio, and this is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, just getting the latest quarterly numbers out of Zscaler. That is the software or security software company. It is forecasting revenue for the first quarter. That guidance is beating the average analyst estimate. ZS on the ticker, Zscaler up now by 1% after hours. A down day on Wall Street. The Dow, the S&P, NASDAQ all declining, closing at or near session lows. Worries are mounting over global growth. The S&P down for a fourth straight day, down 20 points today, down by about 0.5%. Dow Industrials down 151, down 0.4. NASDAQ down 38, a drop there of 0.3%. 10-years up 12 seconds, 10-year yield 1.29%. Spot gold up 0.3%, 17.94 the ounce. West Texas Intermediate crude down 2%, 67.94 a barrel. Facebook wants to gobble up more office space in Manhattan, even as it delays its return to office plans. The Menlo Park-based company already has a large presence in New York City. Last year, it signed a massive lease at the redeveloped Farley building. That's the former post office across from Penn Station. Facebook, though, looking to take advantage of a New York office market flooded with available space. Recapping stocks lower, S&P down 20, down 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, you may know Blade, the company that flies Manhattan's wealthy to locations, including the Hamptons, Nantucket, and South Florida. But the company now doubling down on the business of transporting human organs, announcing that Blade is buying Trinity Air Medical. It's an air transport firm that specializes in organs. That's according to Rob Wiesenthal, the company's CEO. And Rob joins us now. He's the co-founder and CEO of Blade. He's on the phone from New York City. Rob, great to have you on the show. Good to talk to you again. Why is this the right move from a strategy perspective? A company that's known for shuttling people. Why does organ transportation work for the company? Rob Wiesenthal, can you hear us?
We're here. Thank you for the time. We actually started Blade MediMobility back in 2019. We were flying, obviously, to the airports, which is one of our biggest products, where you can fly to JFK, Newark, or LaGuardia for $195 or $95 with an airport pass. And our helicopters were largely used during the day. Organ movements are largely happening at night.
Interesting.
And what we learned was that actually hospitals were paying an awful lot of money to take ambulances to private jets, and move doctors on them from airports, and then landing at other hospitals, landing actually at other airports near hospitals, getting in other ambulances. And most hospitals actually have infrastructure that they normally use for, critical trauma patients, like from car accidents and things, what you call EMS. And so we basically designed a program where we reduced their costs, sometimes upwards of 2/3, where you could fly directly from hospital to hospital. It started with Langone Medical Center, which has our Blade terminal literally on the same block. And we expanded to Mount Sinai. We work with Columbia, Weill Cornell, Rochester. And then about a year, we became the largest in the Northeast. Trinity does the same exact thing we do, but on the West Coast. So combined, we'll be operating in 18 states, and this will be the largest air transporter of human organs in the United States. And as you may know, the efficacy of organs is largely based on how little time an organ sits outside the body. So our ability to actually get these organs to patients faster, actually, not only it really does save lives and improves success rates.
So explain the business aspect of this a little bit, because ideally you'd be wanting to do this at the lowest possible cost, but it's still a business. And so I'm wondering how you're able to make this a profitable business for you while doing what's best for the customers.
Well, at the time before this, a hospital could spend thousands of dollars on an ambulance, then tens of thousands of dollars for a jet. Let's give you an example. A typical mission for a hospital, if they wanted to go to Philadelphia, would require an ambulance on the New York side going from a hospital in New York to, say, Teterboro, a jet that would cost $14,000. A couple $1,000.
Rob, you cut out for a second. How much would it cost?
So what I was saying was, if you take a typical admission, say there's an organ in Philadelphia and a hospital needs to procure it for a transplant patient in New York, that would usually it would cost a couple $1,000s for the ambulance, then maybe $10,000 or more each way for a jet, then another ambulance in two directions on the Philadelphia side. And right now, for about $4,000, we could fly directly that team to Philadelphia, hospital to hospital, wait. The doctors can procure the organs and bring it back to, say, Langone Medical Center. So it's a huge cost savings. And it's really about this infrastructure that already exists. And just to give you a sense, this company that we bought, Trinity, is right now enjoying, 20 to 30%, gross margins. We actually think that we can help with revenue growth and also through cost savings improve those margins.
Well, investors are certainly liking it, sending shares of Blade higher by more than 18% today, coming on the same day that JP Morgan was overweight on the giving a price target of $16, which implies significant upside to where the stock is trading now, Rob. Hey, what are the details when it comes to how you actually, like when you think about this network, what is the distance that you can actually take an organ, and I'm sure it's organ dependent, and what makes it more efficient to do it by helicopter, and when does it get to the point where it's actually too far and you actually have to use a plane?
Well, no, we actually do use planes as well. So sometimes we will use dedicated jet aircraft that we have, but what happens is that if you think about it, think about New York City. What is the drive from all the way to the east side, where say Langone is, going through the traffic all the way east to west, then going to Teterboro? That could be an hour and a half. That's a 4-minute flight. And the same thing in Philadelphia, where you have to land at an airport.
So it's the last
but
mile.
Our emissions. Yeah, it's the last mile and first mile, which when you think about it, that's why we're going to first move their ambulance business to helicopters where appropriate. Then we'll be moving to drones that are unmanned, and eventually what we call EVA, electric vertical aircraft, that can carry the doctors and the organ.
Just in the last 20 seconds, timeline on that. What's a realistic way for investors to think about that?
We expect the first electrified electric vertical aircraft to be able to be used in 2024. That's with our deal with Beta Technologies. That's their deployment. Our internal models don't forecast that until 2025. But clearly, this whole company will be transitioning from helicopters to what we call EVA starting in 2024, 2025.
Fascinating stuff. Rob Wiesenthal, co-founder and CEO of Blade, joining us on the phone from New York City. Shares of Blade higher by more than 18%.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenovec and Shonali Basak live in the Bloomberg Interactive Brokers studio in New York. We talk a lot about the way that different sectors have been disrupted. And in just a few minutes, we're going to be talking more about how education has been disrupted. We're going to be speaking with Dr. Emily Glassberg-Sands, Vice President of Data Science at Coursera. It's a company, it's one of the largest online learning platforms. It's been working on online education for nearly a decade, long before we saw a move to online learning in the midst of the pandemic. In the meantime, though, let's get a check on everything happening in the world of business. Here's Charlie Pellet.
Hi, thank you very much. Tall order, Tim Stenovec. Down day today with the Dow, the S&P, NASDAQ. Let's begin, though, with earnings. Security software company Zscaler forecast revenue for the first quarter. That guidance did beat the average analyst estimate. It does see revenue in the range of $210 to $212 million. Estimates were for $200.2 million. Zscaler, after hours, up now by 0.7%. Down day on Wall Street, S&P 500 did notch a fourth straight decline. Stocks fell in a volatile session. We had NASDAQ and the S&P swinging between gains and losses. Bottom line, down day, mixed economic data kept investors on edge about the timing of stimulus tapering, even as the relentless spread of the COVID-19 Delta variant undermines global growth. S&P 500 index down 20, a drop of 0.5%. Dow Industrials down 151, down 0.4. NASDAQ down 38, a drop of 0.2%. 10-year up 13.30 seconds, 10-year yield 1.29%. Spot gold up 0.3%, $17.94 the ounce, and West Texas Intermediate crude down 2%, $67.92 a barrel. Well, as for the market outlook and where we go from here, Noreen Beeman is president of Orion Advisor Solutions. She was our guest right here on Bloomberg Business Week.
I think we still have not seen the earnings growth that we're going to get once we come out of this pandemic. When you think of really, we've almost had so much stimulus that was put into the market that created this environment that the markets were so positive, but that earnings growth I think we see going forward will be really, I think, an opportunity to continue to go higher.
Goldman Sachs Group is dropping social distancing rules in its London office and will return to full occupancy there beginning next week. American Express, meanwhile, delaying its plans for getting its workers back to the office. Also, Microsoft abandoning plans for a full return to work. Recapping, stocks lower, S&P down 20, drop of 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It was a tall order, but you certainly delivered. Well, Coursera is one of the largest online learning platforms. It's been working on an online education for nearly a decade. That was way before we saw a move to online learning in the midst of a pandemic. The company out today with a new report that shows that women are turning to online education at higher rates during the pandemic than before the pandemic. Joining us now from Coursera is Dr. Emily Glassberg-Sands. She's Vice President of Data Science at Coursera. She joins us on the phone from Menlo Park, California. Dr. Sands, it's great to have you on the show. I wonder about what was the impetus to actually look at this? Because we do hear a lot when it comes to the way that the gender makeup of higher education, the way that more women are going to college in this day and age than men.
Yeah, thanks, Tim. Great to be here. So, brief context on Coursera to situate the report. We were co-founded by Professors Daphne Koller and Andrew Ng, really with the mission to provide universal access to world-class learning. And we believe new skills can open doors to new opportunities for folks from a range of backgrounds, and giving more women around the world access to top quality learning, including in STEM and digital fields that are fast growing in the labor market, has been a big part of our work since the beginning, inspired in no small part by Daphne's leadership. So the report was really inspired by the macro labor market trends we've been seeing amid the pandemic, in particular with women dropping out of the labor market and the unemployment crisis that has disproportionately impacted women. And so we took a look at how was that feeding through to their learning decisions, and what does that imply about where the labor market might be headed.
So, Emily, what are the skills that women are looking for when they turn to online learning? Are they trying to change jobs? Are they trying to get ahead in the jobs they already have?
Yeah, so, we are seeing overall women turning to online education at higher rates than pre-pandemic. And actually, their growth in online learning is outpacing that of men during the pandemic. So that means the gender gap in online learning is starting to close. This is a worldwide trend, but it holds through to the U.S. as well. And one of the things that's really striking, you can look at overall course enrollments from women. They're increasing from about 42% in 2019 to 49% in 2021. So almost half of all course enrollments now are coming from women. But I'm heartened to see that this includes really strong growth in female enrollments in STEM courses and in entry-level professional certificates. So some of the most job-relevant content. To your question, we do see women looking to advance in their current careers, especially those that are already in technology-oriented fields like data and computer science. STEM course enrollments in the U.S. from women increased from about 35% pre-pandemic to about 42% in this year. But we're also seeing a lot of women investing in online learning in order to transition to new careers, especially entry-level professional certificate enrollments for women have really exploded. They were about 27% of those enrollments were by women in 2019, and it's now a much healthier 43% in 2021, as during the pandemic, women are looking to transition to those entry-level roles.
We saw with the JOLTS, the Job Openings and Labor Turnover Survey yesterday, that this imbalance just continues to exist between the number of jobs that are available and the number of people who are unemployed. They're not necessarily meeting. There is this imbalance that still exists. What does your data tell you about the way that people can use Coursera coursework to actually get that job and be qualified for that job that's out there?
It's a great question. I think that's actually a lot of what we're seeing with this growth in global enrollments, but especially in female enrollments, right? Many people, but in particular women, dropped out of the labor market during the pandemic, including to care for children and other family members. They anticipated wanting to go back to work when childcare and other family constraints ease, and they know that developing incremental job-relevant skills now can help them do that, can help them re-enter the workforce in a better position than they left. And this isn't just about the pandemic. There are more and more jobs that are requiring digital skills. Digitization of a lot of customer-employee workflows has certainly been accelerated during COVID. And so while women have on average been very busy during the pandemic, I have two little ones myself, the busyness is real.
I feel that.
Is that totally. They've disproportionately managed to make the space to develop these new skills, to prepare them to re-enter the labor market, and potentially to even re-enter in newer and more rewarding positions that are faster growing and more lucrative than their former roles, and really meeting that increased demand for digital skills.
Dr. Emily Glassberg-Sands, Vice President of Data Science at Coursera. Stick with us because we're going to come back to you after we do some news in just a few minutes. She joins us on the phone from Menlo Park, California. Shonali, when we come back to Dr. Glassberg-Sands, I want to talk more about where these people are coming from, where the companies that they're coming from, the universities that they're working with, and really who the target audience and how they grow that further after the break.
It's so important, Tim. And when I talk to investors all across the world, what they say that worries them most is the fact that people are not gaining the skills they need. In fact, one major investor calls it their lost generation because he's so worried that so many people are just not getting those skills they need for this future workforce.
We'll explore that in just a few minutes. In the meantime, let's head to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey there, Nance.
Hey there. The Justice Department is suing Texas over the state's restrictive abortion law, setting up a high-stakes legal battle after the Supreme Court allowed the law to go into effect earlier this month. Attorney General Merrick Garland says the law relies on an unprecedented scam.
The statute deputizes all private citizens without any showing of personal connection or injury to serve as bounty hunters, authorized to recover at least $10,000 per claim from individuals who facilitate a woman's exercise of her constitutional rights.
Garland says the Texas law is clearly unconstitutional under long-standing Supreme Court precedent. He is seeking an immediate injunction to prohibit its enforcement. President Biden is set to speak at the top of the hour. You'll be able to listen here on Bloomberg Radio. He's expected to order all executive branch employees, federal contractors, and millions of healthcare workers to be vaccinated against the coronavirus. And he's directed his administration to issue new rules saying that large private employers must require shots or testing. House Democrats are working on a $3.5 trillion budget package at the heart of President Biden's legislative agenda. Democrats say its passage will improve health care and help working families. Texas Republican Kevin Brady calls it wasteful spending.
Speaker Pelosi and House Democrats begin ramming through trillions of wasteful spending and crippling tax hikes it will drive prices up even higher.
Brady is also critical of the lack of COVID spending in the package. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. I don't know about you, Shanali, but every time I opened Instagram over Labor Day weekend, I felt like every person who I follow was at some sort of wedding.
Everybody at Bloomberg makes fun of me because I won't let my boyfriend propose to me because everyone's getting married this year.
Whoa, hold on. This took an unexpected turn. You won't let him propose
and
to
not
you?
until next year
Okay.
because everybody is getting married this year.
What's your boyfriend's name?
Alex.
Alex,
Poor
if
Alex.
if you're listening right now, just because you get engaged right now doesn't necessarily mean you have to get married this
The
year.
whole prospect
Get
of a
married in
marriage right
2022,
now is
2023.
exhausting. You know how long? Apparently, there are delays in getting marriage licenses.
I'm not surprised. You know, we talk about pent-up demand. I have a friend getting married next weekend. Obviously, I'm not going to the wedding. I was going to go to the wedding, but I've talked about this on the radio a lot over the past few weeks. The concerns about the Delta variant have stopped us from going. It's in another country.
There's a reason we're talking about this.
Right, there is. But he's delayed his wedding twice.
Yeah,
So there is so he's like, third time we're doing it. We're just charging through with it regardless of what happens, and we hope as many people can come as feel comfortable. But the reason we're talking about this is because among the most read on the Bloomberg terminal is about wedding gifts. It turns out that cash wedding gifts are king for America's pandemic newlyweds. I was totally okay with getting cash when we got married.
Yeah, cash. I mean, cash is so much better than getting a random gift card, isn't it?
It is. And look, or the how many, the champagne cooler, right, that everybody gets. Were at any other time, though, this matrimonial flood would have family and friends scrambling to buy gifts. A prospect made worse this year due to supply-constrained retailers and, of course, those pumped-up prices. This story among the most popular on the Bloomberg terminal by Daniela Sartori-Cortina. Check it out. So 80% of couples on wedding registry and planning website Zola received money. That's according to Zola. Meanwhile, about 30% more cash gifts were created and given on the online platform The Knot between January and July. That compares to the same period 2 years ago, the company said. Honeymoon funds, these are the most popular ask. But virus-weary couples are also requesting money to pay for romantic dinners, massages, and even fertility treatments as well. The cash can certainly go a long way. Check out the article at Bloomberg.com or at the Bloomberg terminal. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, developing story. Just getting word from Wells Fargo that it will be paying a $250 million fine after the Office of the Comptroller of the Currency said it had deficiencies tied to its home lending loss mitigation program and for violations tied to a 2018 consent order. Key headline, Wells Fargo paying $250 million to settle OCC an enforcement case. Right now, shares of Wells Fargo trading higher after hours. It was a down day on Wall Street. The Dow, the S&P, NASDAQ all declining, closing at or near session lows today. Worries are mounting over growth. The S&P was down 20, a drop of 0.5%. The Dow down 151, down 0.4. NASDAQ down 38, a drop of 0.3%. 10-year up 12.30 seconds. 10-year yield 1.29%. Spot gold up 0.3%. 17.94 the ounce. West Texas Intermediate crude down 2%. 67.94 a barrel. Briefly after earnings, Lululemon today up by 10.5%. RH, the retailer, up 7.8%. GameStop up by 0.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that, Charlie Pellet. Let's get right back to Dr. Emily Glassberg-Sands, Vice President of Data Science at the online learning company Coursera. She joins us on the phone from Menlo Park, California. Dr. Glassberg-Sands, I want to get back to what we were talking about before the break that we took. Tell us about who has been taking Coursera courses and how that's different from what we saw pre-pandemic and how that's evolved. Like who is the ideal, user of the product? Or typical, I should say, not necessarily ideal, typical.
Yeah, so our learners are very heterogeneous. We actually have just shy of 90 million registered learners on the platform, including over 16 million from the U.S. I would say that during the pandemic, we've seen a couple of major shifts in the composition of those individuals, although they continue to be very diverse in their backgrounds and goals and interests. One major change has been, as I mentioned earlier, disproportionately women joining the platform to learn across the board, but especially in STEM and preparing for digital jobs. And then the second big shift we've seen is increasingly folks coming to Coursera not just to upskill in their current roles, but actually to prepare themselves to enter new jobs, including entry-level digital jobs. So think things like, how do I become a Google IT support specialist? How do I become an entry-level data analyst, a social media marketer, a data engineer? Early days Coursera, a lot of the folks who joined the platform were folks who already had advanced degrees, including graduate degrees. Now, increasingly, we're seeing people coming in who are in blue-collar jobs. Their work is being disrupted with increased automation, and they're looking for that gateway certificate program that can really be their foot in the door to an entry-level digital job. And that's been awesome to see. We survey learners. We ask them about the outcomes they're experiencing. The vast majority report positive career outcomes, improving their performance at work or selecting a new career path. And where we see the strongest outcomes is from those professional certificate programs, especially the entry-level ones, which are, again, aimed at preparing folks for those entry-level digital jobs.
So a question about this. How much is this replacing people's need to go back to professional schools? The reason I ask that is because we're sitting here in a country where so many people are saddled with so much student debt. And there's a lot of questions about whether we can recreate the model so that school, training, gaining skills is both more affordable and most useful for the workforce. So are people doing professional certificate programs rather than going back to school?
Absolutely. And, we actually have a range of learning programs from individual courses to professional certificate programs all the way up to full diploma-bearing degrees. But you hit the nail on the head that it needs to be, one, affordable, and then two, flexible, right? In today's world, learning can and should be done on your own time. You can take a class from the world's best instructors while, cooking dinner or driving the kids to the park. And when you have to do hands-on applied learning, where you really need to be at a computer, you can also do that on your own time in whatever little pockets you can find for you. And so I do think a lot of it is cost reduction, being able to access this without going into serious debt. But there's also a real component around being able to continue to live your life, keep your job, be with your family, and progress in your career through online learning that then can unlock future career opportunities.
You know, it's worth also asking about you because you're a woman in a data science job. So I'm wondering how you got there and how useful having this data science background has been for you.
Well, yeah, this report's very near and dear to my heart for many reasons. I'm an economist by training, so I've long been passionate about understanding sources of inequality and what we can do about them. And, I fell into tech through that lens, through the impact that I wanted to have, not through my desire to work in the technology field itself. So in college at Princeton, I studied gender discrimination, actually in playwriting. I found through what's called an audit study, so sending never-before-seen scripts to artistic directors and literary managers around the country, that female playwrights were held to a higher bar than their male counterparts. In graduate school at Harvard, I continued to use data to understand who gets access to opportunity and why, focused in particular on the role that referrals and personal networks play in job outcomes and what that means for equality of opportunity. And it was really that same drive to understand and improve, level the playing field that brought me to Coursera 7 years ago. Universal access to high quality learning and credentials, especially given the accelerated rate of change in the skills required for labor market success in the digital economy, seems like the foundations that we need to build on. So, I'm really excited about this report. I think it's a small step in the right direction of understanding gender parity in business and tech, where we are today, what trends we're seeing, what continued opportunities there are to close the gap. And yes, as a data scientist, also as an economist, but also just as a woman in tech myself, I think this report is particularly meaningful, and I'm heartened by the results we're seeing so far.
Well, Dr. Glassberg-Sands, it raises the question for me about when you think, if ever, you could get the experience that you got as an undergraduate at Princeton and as a PhD student at Harvard by not actually being on campuses there, and whether or not that ever will be fully replicated online.
So yes and no. I mean, we're never going to fully replicate the fully on-campus experience in the online environment, but the online environment allows us to scale the best instructors, the best of teaching and learning to a much, much broader audience and at much more accessible price point and on their own time. So a very simple example, I think about the role that instructors play. And on the Coursera platform, we see that female learners enroll more than male learners in courses taught by female instructors. About half of enrollments from female learners are in courses with a female instructor, and that number for men is about 38%. And this trend holds even when you control for things like the domain of study. The effect is very clearly causal. We've run some experiments here boosting how salient is the gender of the instructor, especially in STEM content, and we found that emphasizing that the instructor is female produces substantial uplift in enrollments in those domains by female learners. And when I think about this, I really think it's like role models matter. So you talk about my experience at Princeton, right? I found economics to be a heck of a lot less scary for me because I was being advised by C.C. Rouse, who's now chair of the Council of Economic Advisors, and Chris Paxson and Claudia Golden, all strong female economists. And I joined a company that was led by Daphne Koller, and I certainly attribute a chunk of my success in tech to her modeling. And I think one of the things that excites me about a platform like Coursera is its ability to scale high-quality, diverse role models for a world of learners along gender and a host of other dimensions. So, no, I don't think we'll ever completely replicate the in-person experience, but I think there is a lot of goodness that we can bring at scale and at low cost to folks around the world who need it.
Dr. Emily Glassberg-Sands, Vice President of Data Science at the online education platform Coursera. Thank you so much for taking the time and joining us on Bloomberg Business Week. She joined us from Menlo Park, California. Let's head now to Washington, D.C. to check in with Joe Matthew, who hosts Sound On today at 5 p.m. Wall Street time on Bloomberg Radio. Joe, what do you have planned for the show today?
We're all about the mandates, the vaccines today, Tim. You guys have been talking about it. We're about to hear it from the president himself. He's set to talk at 5. Are we going to get an office pool going here on when he starts? Anybody?
Yeah, I'd say 5:45.
5:45?
Yeah.
Oh, I'm telling the producers now.
Okay.
Tim called it 5:45. We'll get back to you on that. Donna Shalala, as you've been kind to mention with us at the top today as we talk about the future of the vaccine and COVID.
Well, it's going to be a fantastic show. Do not miss Sound On today at 5 p.m. Wall Street time, hosted by Joe Matthew on Bloomberg Radio. Well, that's going to do it for Bloomberg Business Week. We'll see you tomorrow at 2 p.m. Wall Street time on Bloomberg Radio.